Trading Market Technicals morning call video for Friday, August the 9th. Green across the board, slightly green anyway. Dow Jones up 27, NASDAQ up 15, S&P up 6, and Russell up 5. And that was basically a low put in right around about 10, let's say about 10:15, 10:30. Markets actually sold off at the opening and then kind of bounced and meandered around and grinded higher pretty much into the close. Stood at its highs pretty much most of the day once it hit around about 12 o'clock. Very choppy and sloppy price action, to say the least. Anyway, we did have a couple of good days down. Where do we go from here, right? Do we continue our sell-offs? Well, I think it's too early to tell. I think today's going to be very sloppy. It is the middle of the summer. Nobody's around, so you're going to have erratic price behavior in a sense that markets will, if they do decide to go down, they'll go down. They'll usually extend its losses, or if they want to rally, they're going to extend its gains because there's really no one here to really put any big players to participate. So you definitely have to use caution today. No question about it. It is going to be slow, but it doesn't surprise me that we have sloppy price action because we have bulls and bears fighting with each other. And to say, hey, are we going down, or we're going to just now continue its uptrend? And that's what we don't know right now. All we could say is that what the charts tell us, and we look to anticipate from what the charts are telling us. And I do see further downside, but it's nice to see that, to be quite honest, if we are looking to short the market, we don't want to be short at the lows of this little sell-off. So a little green is nice to get short as long as the markets then roll over, and I'll show that to you in the charts. But I want to show you a couple of indicators here. Not much I do have, but I wanted to show you something. We did get a little bullish percent BPNR, and this is a really good indicator when you have price crossing over the 8 MA. And there's definitely a little chop every once in a while. It's always, nothing is foolproof, but we did get that cross. Now, I'm not saying to go short the market here, because the market, we could actually just turn right away and turn back up again. So we need to see a little separation from the 8. But this is telling me, hey, got to use caution. Let's take a step back here. Shorting during the day is not a problem if you're shorting relative weakness to what the market's doing. So to keep an eye on BPNR, and over the weekend, I usually do a full analysis for Monday. Now, with the good numbers in China, we had copper finally waking up here, right? And we had this long downtrend from copper versus the SPX, and now we're back at this overextended a little bit in the stochastics, and not quite over in the RSI, but there's plenty of room to run it to at least this little resistance area of 335, 340-ish, and then of course you got overhead resistance of the 200-day moving average. But interesting, so when you have copper running, you're going to have gold as well. As you can see here, gold started to run. Now, this bear flag, which broke back down again, is just morphing into a bull flag, right? So I think we're going to get our shot to get short gold at the 1400 area. Ideally, I would love to see this 1416 and then hover around here a little bit, and just like it did back in June, and then start to sell off again. That would be ideal for me. I'm not really looking to buy gold at the moment. I'd rather be a better buyer down here if it even gets down there. Maybe not. But if it does, that's where I'll be looking to build a position in gold, or I'd be a better short seller back up to the 1350 to 1400 area. Just kind of meander around here and let it break back down again. We did get the spot. We got a shot at it, and it broke back, but it hit one day and then just rolled over, never saw it again. So patience is key in this market, so just keep that in mind. You'll have the setups and the trades will come, no question about it. Take a look at the dollar. Dollar got smoked yesterday, as you can see here, back into the 80-50 area. So this is still holding. Now, I don't want the dollar to start breaking down too much. Otherwise, this trade, what we're looking at, we might have a clear reversal here, and where equities start to continue higher, and then look for new highs again. I would like to see, my wish would be to see the markets sell off anywhere from 5 to 8 or 10% between now and October, and then get a real good reversal and have a good Santa Claus rally going into the end of the year, and of course the new year of 2014. Again, that's just a longer term picture, but in the shorter term, I would love to see a little sell-off, because then you could buy into the market with a little bit more conviction and say, hey, I like the market here. We're not at the highs, because I just can't see buying the market at all-time highs here, thinking that the market's not going to go down. That's just not in my trading plan. Anyway, but take a look. Keep an eye on the dollar. This is definitely analysis that needs to be done every day when you're looking at the markets, and of course the VIX. Now, yesterday morning, I said, watch, we got a black candle, look for a reversal, and we did get that move lower. Markets came up. Now, that doesn't mean that the VIX is dead. Not a question. The big thing is now, what do we see? We got positive divergence that I mentioned yesterday, and we are now above our big support here, building a base. Now, this is interesting because if we can really start to gain momentum, you could easily see these highs in a matter of a week. So VIX when it gets going, it goes. So let's see what happens here if we break lower again. And again, guys, if we start breaking out this Bollinger Band, when it stops and breaks back in, that's going to be a buy signal for the VIX and a sell signal to equity. So let's see what happens here. But we did get a positive candle, but again, we did come back in from yesterday. Positive divergence is building, so remember that, okay? That's bad for the markets, good for the VIX. All right, so let's keep an eye on that. Let's take a look at, I haven't showed you this average true range. Obviously, when we start to move up, the average true range, there's no volatility. They start breaking back down again. So this is what I'm going to watch, a break out of this downtrend line of the ATR. Once the ATR starts to break, you'll see the SPY or of course the S&P cash here start to break lower again. So that's going to be interesting. Will I be watching that as well today and the coming days and weeks to see if we have more volatility coming in, along with my VIX and my U.S. dollar. Okay, now let's go into the indices. As you can see here, the spiders really had nothing really much happen. We had a little bit of a doji. We built off that doji off the 20-day moving average, and we did get a little bit of push higher. But again, nothing really to write home about. It is sloppy price action to be expected when you have a few days down. So today will be interesting. I think today you're going to have about an hour and a half worth of trading, and then that's pretty much shut the computers off and go play golf. That's really what happens on the doldrums of the summer, especially on a Friday. So just keep an eye on this here. We could be back testing this upper trend line and then fail again. So maybe we get up today, and then let's see what happens on Monday, Tuesday of next week to see if we get a continued selling. We are down about 4.5 handles right now in the minis. And by the way, I had a guy ask me an email, I see you look at the ETFs. Do you look at futures? Absolutely. Futures are a must. You need to look at futures, and you need to trade futures too if you do trade them. But we do get a lot of people that don't have the feed and like to look at the ETFs, so I just show them the ETFs. Futures are much cleaner when you're looking at the chart because it's continuous. You don't have breaks and gaps, which is also nice to see gaps as well, so don't get me wrong. But I'm doing the ETF just to accommodate everybody. It's just a little easier. Okay, that's reason why. Otherwise, I love looking at futures. I trade futures. Futures are a must in your trading toolbox. Okay, SPY, as you can see here. Let's go into look at 30-minute spiders. As you can see, we did come back up, and this is really, you can see we sold off. We actually came back up here right around 1 o'clock, and then literally just went sideways pretty much most of the day, and then sold off ever so slightly at the end of the day. So really sloppy price action here, guys. And we did fill the gap from here. And we filled the gap in this area right here. So we did sold off, and we actually filled that gap for the day as well. So let's see what happens in the next coming days. Again, I don't see much happening today. So I would be, less likely to be really active unless obviously something comes out in the middle of the day. Here's the diamonds. Diamonds here came back, now back testing this uptrend line from November of 2012. Let's see if we can get a little fuel and break back out again. Again, I'd like to see it get down to the 50-day moving average and then start looking to buy, buy some of these industrials. Transportation sector, okay, not bad. We did get a 4-day sell-off. Caught this long-term uptrend line from 2012 again, and then we kind of got a little bit of a back test. Again, this is where my target would be, 50-day moving average. Pretty much 50-day moving average would be downside target number one if this market really gets going here. Here's the Russell, one of our leaders, as you can see here, and again, 50-day moving average. We have this confluence area of support, horizontal trend line support as well, which coincides nicely with the 50-day moving average. So the 50-day moving average on these sectors that we follow pretty much is key. Now, I mentioned also the sector to watch is going to be the semiconductor sector. Now, obviously, that might not happen. However, Broadcom, Intel, Micron, AMD, they were all weak yesterday. A lot of the semis were weak, but then they obviously rallied with the market, and the semis will rally with the market. Remember that. These are one of the key sectors that need to rally with the market to get that bullish symmetry overall. But if you get a breakdown in the market, you're going to get a breakdown in semis. I will be looking at the semis to get short. We do have a head and shoulders in the SOX. This is the SMH, is the ETF. I showed you that yesterday. Pretty much the same. Here's your head, and here's your right shoulder, and here's your left shoulder right up in this area. Here's a neckline. If you break the neckline, we get a little bit of a breakdown. I'd like to get a breakdown and a back test of the neckline to confirm that and then roll over again. So, again, looking good. I would prefer a rally green back up into this here, not taking out that right shoulder, but somewhere in here, and then look to put on a short longer term, whether it be options, via options, call credit spreads, or obviously buying outright put, or obviously sell short the stock. But that's what I'm looking for in the coming days and weeks. And also the banks acted horrible yesterday, and that's also not a good sign as well. Banks are another key sector that needs to rally with equities, and they haven't done so the last couple of days. So Goldman Sachs, the big leader, which I also look at, JP Morgan, they are down as well. Here's the XLF. Didn't really hurt too much, the XLF, but you can see now it's starting to kind of roll over, breaking down. This could actually be off the bull flag, a nice M formation. If you see that M making that lower high, that right side lower than the left, so that's a lower high right there. Here's your neckline right here, as you can see. Matter of fact, I'm going to put that down here for you guys, right up in here, right there. Okay, so there's that M formation off the bull flag, and a break below 2030 on a closing basis would actually probably send the XLF and the bank sector lower, which then indeed will help equity sell off as well. Apple had a little bit of sell-off, but this is actually healthy. This is actually a slow sell-off, and this is something that we want to look for. You come in, here's your flagpole. Maybe he's building a bull flag. We want to get too far, but you know what? Somewhere in the 450 area, another 10 points. Very low volume pullback. This here could be having some energy to be breaking out of that 200-day moving average. So let's keep an eye on Apple next week. And lastly is the Qs, as you can see here, Qs. All right, guys, have a great weekend. Enjoy the weekend. Don't get too crazy today. I don't think much is going to happen. It's been a very quiet overnight session, especially in Forex and futures. Again, we are down about 4.5 handles as I'm recording this, but it is pretty quiet here. So next week is going to be very interesting if we can resume this sell-off, or if we actually roll into back to the upside and going to look to take out the highs. We don't know, but we did get a good, nice call on the volatility, and I am still looking at the VIX here, and I do think that there's a bigger trade in the VIX to come. So let's keep an eye on things here. Take it easy for today. Enjoy the weekend, and we'll talk to you on Monday with a big report. Have a great day, everybody.